Good afternoon, traders. This is Tony D from easyMarkets. It was going to be a bit of an RBA preview special today, but we've got bigger things to talk about, namely what is going on in the stock market. You see the biggest drop in 6 years overnight, largest number drop in history on the Dow, over 1,100 points. And during the Asian session, we've fallen a further 2%. And the market's very fragile. And what's going on here in the backdrop and what's driving this is that one of the main trades that's been going on throughout this year has been the short volatility trade, and most of last year as well. And basically, that's where you short the VIX, and as long as the stock market doesn't have big corrections, you make money each month. Now, the VIX itself has been one of the most crowded trades in the market, and so when the inevitable end came, like it did last night, capitulation mode hit, and what happened is that literally billions of dollars worth of positioning had to be liquidated at once, and this caused all mayhem in terms of if the VIX is at 30, and usually it's when there's trouble it goes to 20. Where should the stocks be? And in terms of the computer programs, they thought it should be a hell of a lot lower. So it fell a good 900 points in 5 minutes towards the end of the close. Now the market had a huge rally in the hour after, and then started to fall again, and has made new lows here in the Asian session. In terms of what the impact is, look, it's not housing crisis level, it's not government crisis level, but what it is there will be ongoing effects in terms of how much people trust some of the products that are in the market. Also, some of the big banks own these funds, and they're looking at some pretty heavy losses in the short term. Now, really what you need to see is just how big, if any, contagion there is. If there is very limited impact in terms of stability and financial impact on other entities, then the big clean out and all the sellers of the VIX are going to have a short-term impact mostly, right? So the market broadly will look at the US tax cuts, and then have a look at the economic fundamentals around the world. Global growth is stellar, European growth especially, and potentially then stabilize and return to buying stocks. But the very short term, today, tomorrow, and the next day, while there are so much unknowns, then definitely the danger is that we have more and faster and more aggressive selling. In terms of percentages, these are very small percentages. If you're looking at big moves that we've had in the past, 10% in a day is getting there. Whereas this is actually, even though it's 1,000 points, it's from a much higher level. So it's only around 4% in terms of the size of the drop, and the size of the drop since the high is only around 10%. Key levels you want to be watching is 200-day moving average coming in around 23,000. A break below that then gets more people thinking that we're not just in a correction, we're in potential bear market, and sometimes that could be a trigger just for more selling. But this sort of mode it's a little dangerous to try and pick the bottom, and so what you want to be doing is waiting for the market to stabilize, and then there'll be some opportunities potentially there for the long side. In the terms of short term, you've missed a fair bit of the move in the seller side, but selling rallies can work and has worked for the last 3 days. So in terms of selling rallies, you want to look at previous levels where the market broke down from. So that would be up around about 23.8, so about 500 points, which sounds like a lot, but in this sort of market where the volatility is so great, you may get that on the next initial rally that happens here in the market. So this effect on the Dow is coming through on every indice, and you are seeing it come through on, it will happen, it will have follow-through effects, but it's just really how big a story is it? Is anyone affected? Is there contagion risk or not? Otherwise, the reason for selling, apart from being the market being the most overbought of all time, this was due. Right, correction was due, but the size of the correction is pretty sharp, and that's because of the VIX, and it may settle down. The Aussie dollar doesn't do well in risk-off mode. You can see this. We've fallen from 80, nearly 81, all the way down here to 78.60. In terms of levels, though, the market is always looking at that 78 to 750 as the previous big resistance that held for many years. Now it's going to be turning into the big support. So that level is relatively close. 78 and 77.50. In terms of what's coming out today, the RBA, it isn't a huge event in terms of everyone knows they're going to remain on hold. But what really they look for clues is how they feel about the economy, and possibly they're going to have a slightly more accommodative, dovish tone just because of the recent volatility in the stock market. They may note that recent volatility has made it harder to predict movements. Coming across a little bit more cautious is also coming across a little bit more dovish. If they also note that the recent recent strength in the Aussie dollar has potential to have negative impacts on the economy, then that will be taken as another little slight jawboning. Broadly speaking, they do jawbone a lot, so does the RBNZ, but the market has fallen a couple of cents, so the mess might be a little bit less impetus here. If we're up at 82 on this same meeting, then definitely they'll mention it. So in the short term, I don't think you get too much movement from today, from the RBA. Really, you just have to see if there's any leaks or any clues there as to how they're feeling about the markets pricing in rate hikes later this year. If they put anything out there, if they want to talk down the Aussie, they can say something along the lines of no rate hikes envisaged in the next 18 months, something like that, to really get the buyers of this RBA is going to raise this year story pushing back their bets, and that will have a negative effect on the Aussie dollar. Aussie dollar can also just fall straight if stocks keep falling. Right, so that's another reason you got to be a little careful. The trend has been broken in terms of previous lows. Multiple previous lows have been broken, so this is no longer the same market it was last week, and you have to adjust your trading to that. But give us a call if you want to have a big chat here. There's a lot of ways to play in multiple pairs. Gold's doing really well in this environment as well. But also, if you just want to have a bit more of an understanding what the VIX is and how it's used by investors and what its impact could be and what the size of it is, come through on the numbers below. If you're not a member of the easyMarkets dealing room, you can get access by joining up a VIP account. You can come through, get assistance from a dealer like myself, and also come through to some of our training that we do have, which we do on the weekends here in Sydney, where we can actually teach you some methods to improve your trading.